Over the past 12 months, the Atlanta housing market has done over $1 billion less than it did the year before. That's a 46% drop. Now, on the surface, the market looks stable. Home prices haven't dropped and homes are still selling. So why has our market contracted by 46%? That and more coming up in this month's edition of Atlanta's Housing Market Update. Let's jump right into it. So the number is actually $1.1 billion in less transactional volume. So there's a lot to unpack there. I've got some really interesting stats to share with you. Here's what we're going to do in this video. Here's what to expect. So we're going to cover 4 different topics. We're going to look at the market as a whole, then we're going to drill down to single family, townhomes, and condos. If you want to watch the whole video, great. Grab a cup of coffee or whatever your favorite beverage is and join me for the ride. If you only care about townhomes or condos or single family, in the description, I've got all of the chapters, so feel free to skip around and watch what's most relevant to you. So let's jump right into this. So this first chart tells a very interesting story, and it's the story of the overall volume here in Atlanta. You take all of the sales, you take all of those sale prices, and you add them together in a given period of time, and that's your total volume. And this is rolling 12, so we're going to take 12 months worth of data, and that's what we're going to be comparing these different periods to. So I've got, for instance, February of 2013. So from March 2012 through February 2013, there was $834 million worth of sales. This February was just a little bit above that. We're at 1.286, really 1.3 when you look at it, compared to the period ending last year, which was 2.38. So it's really $1.1 billion less total volume. Now, for a market where interest rates have been coming down and you're seeing more and more inventory, this is a number that's concerning, right? Because that's almost a 50% drop in the total number of sales that happened for the 11 county region that makes up Greater Atlanta. It's 46% to be precise. Now, the peak was back in 2022 during I call it a period of over exuberance with all of the real estate sales because interest rates were so low, right? That's almost $3 billion. Well, the last time that we had just 1.3 billion was over 10 years ago. You got to go all the way back to January of 2016 to see 1.27. So we're going to unpack this. Let's take a look and see, because there are certain areas where, depending on the type of product, whether it's single family, townhome, or condo, you're seeing some differences. And I think some of this can be explained, and I'm going to try my best to do it. So let's move on. Now, if you were to guess, what do you think is driving this drop in volume? Well, if you were to say interest rates, I certainly wouldn't call you crazy. That's definitely one of the biggest drivers here. So rates shot up. People didn't like the new payments. Can't blame them. Those payments are crazy when interest rates are 8% in October of 2023. Now we're down to 6, right? But nonetheless, that put a little bit of a stall, a little bit of a correction in the market. So that is definitely one of the driving forces here behind the drop in volume. Home price appreciation, which both of those, home prices and interest rates, both are levers in the affordability calculation, right? So home prices went up as well, and suddenly volume's down. Now, those are 2 very logical explanations. Are there more? We're going to dig a little deeper and see if we can uncover anything. But this chart does a phenomenal job of telling us where the market has moved to. So black is 2021, and obviously green is 2026. These are for the 12 months of total sales ending in those specific periods. So we're not talking about volume here, we're talking about total sales, okay? Slightly different. We're looking at units of measure. So here in 2021, 77%, over 3/4 of all of the transactions in Metro Atlanta at that period of time were for homes that were $400,000 or less. Now it's 53.4%, from 77 down to 54.3. That's a big drop in properties that are purchased in that price range. Now, a big reason for that is because, especially down here, 0 to 200, you don't have a ton of those properties anymore. Those properties have graduated to the next segment and so forth. You're going to see that kind of cascade throughout here, right? So there aren't a bunch of sub $200,000 properties anymore. They're mostly condos and townhomes and or fixer-uppers for single family. Now, a lot of that inventory moved into the 2 to 400 range, but that's 46% of the market, and it was 57% back in the day. Where have we seen some of the largest increases? Well, 4 to 600 is where that biggest increase can be seen. Makes sense. If it was 2 to 400 and those prices went up quite a bit, now we're in that 4 to 600 range. It's a 26% increase, whereas back in 2021, made up just 16%, 1/6 of the market, right? Now we're over a quarter of the market. But that's not the only places that we've seen big jump up in the number of properties that have sold in these upper echelons of the market. So 6 to 800K, it's 5.2% of the market now, whereas back in 2021, just five, we're not talking about 10 to 15 years ago, we're talking 5 years ago, that made up 1.8% of the market. Now, 8 to a million is 6.8. That's a big jump up as well, whereas back then it was 2.3 million to million five, it's 5.4% of the market, it's 1.7, and anything above 1.5 now makes up 3.4% of the market, whereas it was 0.8. So these are big jumps up, and it kind of shows you where the market's gone. This next chart also shows you kind of where that movement's gone. So look at it from this perspective. 57.3 down to 46.3. The other big drop was 0 to 200, almost 20%, all the way down to 7.1. That's like a 300% drop in the number of sales happening in that bracket because the homes don't exist in that bracket anymore. The biggest gainers, you can see 4 to 600, that's the biggest one on here. And these are some still substantial increases. So definitely the market has just shifted, right? And it's like the average house went from being a $200,000 to $400,000 house to now being a $400,000 to $600,000 house. We're going to see here in a little bit that the median price is $445 for single family, right? It's $422 thereabouts for the blended median price, but that's where the market is. We're between 400 to 600 on average right now. So we're going to zoom in a little bit and we're going to take a look at counties and property types, starting with single family for this storyline that for the volume storyline. Then we're going to move on and look at the overall market. Okay. So right here, the biggest number that stands out to me when I look at the biggest drop in volume is here in Gwinnett. Look at that drop from 300 million down to 178. That is a monster drop in amount of volume. Now, of course, there's a drop everywhere. The only county on here that stayed relatively even year over year is Rockdale. Why is that? Because real estate in Rockdale is really affordable, comparatively speaking. And with home prices, we're talking about home prices and interest rates and affordability, people are looking for more affordable options and they're finding them with single family homes in Rockdale. Well, what's happening with townhomes? So when you take a look at townhomes, the biggest drop here is in Fulton. And again, Gwinnett's not very far behind, right? That's and arguably like the big three are right there for drops. Those are big drops. Now, what about condos? So if we take a look at condos, this is a monster drop. That is more than a 50% drop. It's like a, what is that, 60% drop in the amount of volume for condos in Fulton. So what this tells me is when we look at these numbers, people, single family right now is a little bit more expensive, right? So people are starting to shy away from that and they're looking at different options. One of the options that they're looking at, well, it's not condos. People have moved away from condos. So townhomes, right? Which would explain why there are so many townhomes that are being built everywhere. They're one of the more affordable options right now. But if you're a family of four, and you want to have a nice backyard, kids to play and all that kind of stuff, you're still not going to want to buy a townhome. But for a lot of people right now, townhomes are the more affordable option. Now, this is an interesting heat map because it shows us the hot pockets based on zip codes where you can see the change in total sales. So we're not talking about transactional volume here. We're looking at total sales. I know that we've been kind of going back and forth between volume and actual closed transactions, but this is closed sales. It's a unit counts. So when you look at this, the more red the map, then obviously the higher concentration of dropped sales or the percentage of drop. The blue, there are two zip codes in greater Atlanta where between 2021 and 2026 sales actually went up. So I'm going to show you those right now. So you basically have over here Stone Mountain, it's a 12.5% shift in 30088, and you've got Lithonia, 2.3. Everywhere else, it's negative. There are less total sales happening everywhere. Well, you're going to have less sales if you're going to have less volume. So they kind of go hand in hand, but some of the biggest drops, take a look at this. So over in Cumming in 30028, I know I've been ragging on Cumming a little bit in the different videos, But it's not just because I want to pick on coming. I still think that it's a great place to buy right now. There's some really good buying opportunities. But this is a big, big drop in where the market was just 5 years ago, 62.7%, right? So that's the total less sales that are happening. So for home sellers that are right now on the market in Forsyth County in this specific zip code, you've got other zip codes where stuff's moving a little bit better. I mean, it's still a 50% drop in 30040, but nonetheless, if you're on the market or thinking of selling your home in some of these really hot red pockets, you really have to be priced extremely well. The condition of the house, if you go to the market thinking, you know what, I'm going to sell the house as is, buyers, this house was good enough for me. It's going to be good enough for the buyer. I don't have to worry about fixing anything. Good luck with that strategy. Let me know how that works out. Unless you're in some of the hottest pockets right now, that's not going to be a viable strategy, and hoping to sell your house is not a strategy either. So you've got to be more tactical and strategic about how you approach this market, or you're going to get burned by it. And a lot of people are getting burned in these hot red zones right now because there's just less people buying in them. So you'll see that as we develop this video. You're going to see days on market going up. You're going to see months of inventory going up. You're going to see pending ratios go down. And they're all signs of a market moving towards out of balance into a buyer's market. But there are exceptions to every rule. So all of these charts, they're always available for free. You don't have to sign up. You don't have to give me any information. In the description and in that first comment, I've got a link to the slides. Feel free to look at this at your own pace because I'm going to kind of zip through them as we go through here. All right, we're going to take a quick look at mortgage rates before we jump into the rest of the macro stuff. And this is really exciting in a way, and at the same time, it's extremely frustrating because today the rates are higher than this, but for the purpose of the video, since we're trying to focus on the month of February, the weekly average, the Freddie Mac weekly average, which is a big number for the 30-year conventional, came in under 6. It ended the week at 5.98. That's great. Seeing a 5 in interest rates is a positive thing. Now we're back up to like 6.11, 6.13. So the market has not reacted too well to, I guess, all of the geopolitical stuff that's happening right now, right? So there's a lot to potentially unpack there, but nonetheless, for a little while there, that trend finally broke the 6% barrier, and we were in the fives. Now, interestingly enough, the 15-year had trended up while that was happening. So moving on, let's take a look at median price. So I mentioned a little bit earlier that the median price is still $445 for single family. For the overall market, the blended, it's $422. Townhomes are now at $385 and condos at $295. I'm going to break this down and look at median days on market. It's taking at the middle of the market 55 days for a condo to sell. The average is higher. Townhome 44. The overall market's 33 because there are more single family homes selling than these other two property types, and they're at 29. So that's why 33 is so close to where single family is. So roughly a month to sell a house at the middle of the market, which means that there's a lot of houses that are above that too, right? Think of it that way. So months of supply, condos are firmly in buyer's market territory. We're going to drill this down by county a little bit so you can kind of see how that compares. But townhomes at 4.8 last month, we were at 4.7 and 4.6 in the fall. And then last summer it was at 4. It keeps trending up. Townhomes are going to be in balanced market territory here probably before we get to the month of May. And because this is not a market that follows the school year as closely as single family. Now, single family is at 3.8, but I expect this will drop over the next couple of months, right? We're entering spring season, and single family follows the school season a little bit closer, and the hot summer, or not the hot summer, but the hot spring selling season will have a nice positive impact on that. But overall, we're at 4.2. So pending ratio is the other metric that I like to look at. It gives us a slightly different perspective from months of supply. It's the absorption rate, tells us how many houses in a given area will go under contract over the course of a month, right? And so for single family, we're at 15.7%. So roughly 16%, which is like 1 out of 6. So if you're a home seller who's selling a house right now and you've got 6 other houses on the market, in a given month, 1 out of those 6 will go under contract. Everyone else sits on the market until the next month. Condos at 8.7, it's what, like roughly 1 out of 12, basically. That's not very good. So markets, there's an ebb and flow. There's some seasonality to it when you take a look at, basically just the graph. But something tells me this year we're not going to be turning back into balance. I think that this is going to continue going down, and the market just improves. If you're in the market to buy, well, you can be much more aggressive with your offers. Again, hyperlocal, it's pocket specific. There are parts of town right now in different price ranges where homes are selling for above ask. People are waiving all of the things, appraisal contingencies, financing contingencies, the basically the due diligence period is now again, hey, buying it as is with the right to inspect. Seeing that happen right now in East Cobb, you're seeing it in Roswell, you're seeing it in Alpharetta, you're seeing it in Johns Creek, and it's really happening in that really like $9 to $1.2 million range. That's a market that just doesn't have enough inventory, but the buyers are out in droves right now, so it's a lot of competition. It's not every market. A lot of these other markets, sellers would love to receive an offer, and they're not receiving offers. So you can afford to be a little bit more aggressive with your negotiating and get a better outcome. So it's important to know the numbers and just where they apply and what part of town and how to use them to your advantage. Moving on, let's take a look at what houses are selling for. So right now, the average for a single family is 95.9%. It's been at that for a little while. Townhomes are at 96.1, and condos are getting a 5.6% discount on the last advertised list price before it closes, and you find out what the close price is. So we're going to look a little bit later in the video. We'll take a look at actual price reductions and all of that data as well. All right, still in the macro stuff. So overall trends, active inventory is up. We're up to 17,303 right now. New properties coming to market. There were less new homes hitting the market in February than there were in January. And of course, pendings at this time of the year, people are starting to buy a little bit more. So that's up marginally as well. In January 2,700, we're up to 3,010 pending properties for the month of February. Now, closings are still on the low side, 2417. We're going to expand on this here in just a little bit. And it's normal to see the failures come down because properties are now coming back to market, right, at this time of the year. So moving on, let's look at the new listings. So we're under where we were last year for new properties coming to market. This time last year, there were 7378. And as I just mentioned, we're at 6783. How we measure with active, well, we're above. So it'll be interesting to see next month because you need to have new properties coming to market, less of them going under contract, and then less of them failing for this inventory number to just really keep growing. But I think that's what's going to happen. I think you're going to have a whole bunch of properties coming to market here soon. Now, we peaked out last summer at around 20, almost 21,000 active properties on the market. And right now we're at 17. And this time last year, we were at 15,736. So it's roughly like 1,600 more properties year over year. I think that you'll probably see around 22, 23,000, maybe 24,000 active properties in the peak of summer. So that'll be interesting to see if that prediction comes true. Now, pending properties are going to be under by quite a bit. So this time last year, we had 4,300 under contract at this time. That's a significant number. Now we're up from January, which is good, but we're still significantly below where we were this time last year and the year before for that matter. Closings also going to be below. So this trend's up. This is trending down. You don't want to see this trending down. That's not a good thing. So we had more closings in the month of January, almost 2,700 of them, and now we're down to 2,417 for the month of February. So this next update, this next month, like we need to see this peak up here. If it peaks down, I'm going to change my whole forecast for the year. Let's put it that way. So, and then over here, we're going to look at failed listings. So they're trending down as expected as we head into spring market. That's probably not going to trend up too much just yet. But then after, people are going to play games with repricing properties and withdrawing and putting them on to play with days on market. That's going to happen. So that's why you see this go up over the course of the year. Okay, this is one of my favorite charts, and it shows that right now for the overall market, This month, I'm going to break this down by property type. It's going to show you where some opportunities are. So right now, we're at 7.2 active listings for every closing. Back in 2022, that period of over exuberance that I like to talk about, it was almost a 1-to-1 ratio in the month of February. We were at 1.1 to 1. So over the years, active inventory went up and closings kind of held steady between 23 and 25 as people were figuring out what they were going to do with rates. And then boom, big drop down. This is a gap that is widening. Okay. Now, let's see how it compares when you look at single family to townhome and condo. So over here, we're going to look at single family. So single family is doing a little bit better. So 6.3 to 1. And again, almost a 1-to-1 ratio back in 2022. And this time last year, the ratio was quite a bit smaller. You're looking at 4 something to 1. So that's still opening up, right? Not as bad as townhomes and condos. So townhomes are at 8.5. The scariest thing to me when I look at townhomes right now is that this time last year, you had over 1,000 closings. Now, is that because we had a whole bunch of new construction and they were all closing in like December and some spilled over into January? That's a very good possibility. You know, the one thing that hasn't been broken down, and maybe that's a study or something for a different video, is checking out to see how many of those are new versus resale. But look at this drop. That's almost a 3x drop in the number of closings year over year, from 1,014 down to only 360 townhomes that have sold. Meanwhile, inventory skyrocketing. That's a big jump up from 2,672 active listings up to 30, almost 3,100, and that's a 8.5 to 1 ratio. I don't like this drop here. This is a big, big drop. We'll kind of see how that opens up, but this is not. There's a lot of competition out there for townhomes. And if you're in the market to buy a townhome, it's a phenomenal time to be buying because you have home sellers that are going to sit in the market for a while and they're going to have to take better pricing in order to sell their properties or they're going to sit. So I know for a fact that there are some newer townhomes that were bought in the past year or two where home sellers unfortunately are finding themselves upside down because of the amount of inventory relative to what people are wanting to spend on them. So people that are on the market are lowering their prices, and sometimes it's driving brand new construction down to be under what those people bought those houses for just a year or two ago. So you're going to start to see probably a little bit more short sales happening in the market. Either that or you're going to have to sit and wait for the market to recover if you're in a position to do so and hold on to the property. Okay. So that is not looking great. It's even worse for condos. This is condos. So 14.3 to 1. So there are 2,077 active condo listings, but only 145 closings. This time last year, 258 were closing in the month of February. So it's a big, big, big spread. So one of the biggest drops in volume in Fulton County, it was a big drop, right? About 60%, if not, I think it was 66%, somewhere thereabouts. For total transactional volume for condos. People aren't buying condos right now. So if you have a condo that you're putting it on the market, you've got to be creative. I sound like a broken record, but that's the formula for selling a property. Price it right, make sure that the conditions tip top, and pricing it right is easier said than done. Pricing it right means a lot of different things. It's understanding where your competition is because you're either helping your neighbor sell or they're helping you sell. It's what we like to say in real estate, right? But it's true because it's positioning. And when a buyer is interested in buying, let's say, a condo, townhome, or single family, they're looking at all of the different options and they're not always looking only the way an appraiser will. You know, an appraisal is looking at it from a mile radius around the property, you know, plus minus 500 square feet, similar bathrooms, bedrooms, similar home features, size, year built, style, like all that kind of stuff, right? But a buyer is going to go a little bit further out. They might consider another property that's a couple miles away, for instance, because their area is a little bit bigger. So here it could be all within the same building. It could be a couple of different buildings and it could vary wildly. So when you're positioning yours, you have to understand where you want to know what stuff has sold for, but it's sometimes too late because just because something sold that was very similar, it could be the exact same unit, and your unit could have the exact same upgraded features and so forth. But if that property sold and the market's already moved, then you're going to have to price it for less than what the last sale was in order to attract that buyer because you've got more competition than you've ever had. And right now, buyers aren't buying condos. So to get one to move, the best analogy I ever heard about this in a declining market was back when I got into real estate in 2009. I used to go to those team meetings at Keller Williams all the time, right? And they would say, think of it as a mountain, and you've got this snowball that's starting to roll down the mountain, and the snowball is the market. Most people in a declining market, and the declining market is not necessarily Atlanta as a whole. I've got to be very specific that it's very hyper local and very segment based. There's a declining market for condos, no question. That's what the numbers are saying. So as that snowball rolls down the mountain, the snowball itself is the market. Too many people are running behind it, trying to catch up to it. Those are the home sellers who price too high. So in order to be the next property that sells, you have to get in front of the market so that when the market hits you, you sell. That means you've got to price it more attractively. So the days of testing pricing on the open market, good luck with that, especially if you're a townhome or a condo right now. Like you've got to, if you're priced at 500,000, hypothetically speaking, and the last sales were 510, somewhere around there, you might want to consider pricing it with a 4. So it's all about being proactive, reading the market and understanding what's going to happen. There's a lot of different indicators, but that's why watching a video like this is helpful. We're going to dive through the rest of this. So, okay, moving on. Showings. Where is the market attention right now? There's a lot of people out looking. If you take a look at that, the last time that we had this many people searching for homes in the month of February goes all the way back to 2020. That's right before the shutdown happened in the month of March, right? So February 2020 had 77,000. Actually, this is going to be really interesting to see next month when I do this because it's going to be March and April, and we'll be able to see exactly what those dropped to. But February was right before things happened. So after that, it dipped and it was kind of in those mid 60s, and now it's back up. And active inventory is back up, but pendings are lower. So there's a bunch of people out looking at houses, they're just not buying them right now. So buyers, they know they can afford to be pickier, which again goes back to my whole point about making sure that your property is just really buttoned up and that you're priced well. So okay, total showings by year. And then we're going to drill down into other specifics, but at 77,000, we're ahead of where we were these past 2 years. You can kind of see what that trend line looks like. I expect this to be above last year's mark all year long. So we're going to talk about specific property types. I'm going to talk about single family homes for the next couple minutes. If you want townhomes specifically or condos, feel free to skip ahead, check the chapters. Feel free to watch this as well, but if you don't care about single family, you don't have to sit through it. Check the chapters and skip to the part that is going to interest you. So median price broken down by county. I mentioned in the intro that even with the near 50% drop in transactional volume, that home prices didn't change a whole lot. That's absolutely true when you look at median price. So Cherokee, they're up a little bit, 502 to 509 year over year. Other places that they're up, Cobb from 469.9 up to 475. Fayett's up from 480 up to 490. Fulton had a big jump from 550 up to 570. That's a big jump, right? Where we've had a little bit of a pullback. Places, for instance, like DeKalb, 398 down to 382. That's the new median price. And then Gwinnett is another one, 448 down to 440. A little bit of a move in Paulding, but not quite as pronounced as Gwinnett and DeKalb. Now, dollar per square foot, that's where you see a big pullback in DeKalb. DeKalb's almost at the greater Atlanta average of 191 a square foot. You get more for your money in Clayton, get more for your money in Rockdale and Douglas. It's the perimeter counties. Those are where some of the most affordable homes are right now. Cherokee, a little bit of a pullback. Really, there's not been any increase here except for in Fayette. Marginal increase from 179 to 183 a square foot. So let's take a look and see where the market is with actual new listings. So more new listings. We saw that there were less new listings coming to market this month compared to February of 2025, but not in Cobb. There are more listings in Cobb at 772. Big pullback in the number of listings coming to market in Fulton, though. So those are some big differences. Now, active inventory. So if there are new listings coming to market in Cobb, you're going to have more active inventory, and that's what that is. But look at this big jump in Gwinnett. So that's 500-ish, like 450 more properties coming or that are on the market for single-family homes in Gwinnett compared to last year. A little bit of a pullback in Fulton, DeKalb. That's a big jump up in Cherokee as well. Now, pendings. Pendings were down across the board. So there's not a single spot on this chart that shows where homes went under contract in one county more this year than they did last year. These are significant pullbacks, especially in Fulton and Gwinnett. So we saw Gwinnett had some of the biggest transactional volume decrease year over year. Fulton did as well. Well, they're leading that with pendings. So that doesn't bode well for next month because what goes into contract this month closes next month, right? So we'll see closings drop by quite a bit next month, I would imagine, as well. So, okay, pendings, we're going to look at closings. So closings, again, numbers of pending last month were down. So for February, you're seeing them seeing less closings. That whole sequence makes sense, right? So Cobb, DeKalb, Fulton, and look at this big drop in Gwinnett. Sizable. They're not up in any single county. Now, taking a look at failed listings, there's not really a ton of surprises on here. Okay, so Cobb, DeKalb, Gwinnett, failed listings are up. Fulton, a little bit of a pullback. No major surprises on here. Median days on market. So take a look at this. There's not a single spot where homes are selling faster this year than they did last year. So overall, we're at 29 days is what the median, half of the market, this is not average, but the half of the market is the more telling stat. So 29 days, taking almost a month at the middle of the market to sell a house. Well, in Cherokee, they're moving a bit faster, but that's a full 6 days more than it was last year. Look at this DeKalb, 20 to 29, it's a big jump up. 27 in Fayette to 39, it's a big jump up. Look at Forsyth, 17 days, it's practically doubled. It's taking twice as long at the middle of the market to sell a house in Forsyth County. Another big jump here in Gwinnett. So, it's just taking longer. Now let's take a look at months of supply, and you can see here that you've got two counties that have moved for single family into balanced market territory. And this was different just a couple months ago. This time last year, there was nothing. They were, technically speaking, we were in a seller's market still in the greater Atlanta area. Now, this time last year didn't feel like that, but that's what the numbers are showing. That's what the black lines are. Buyer's market is above this threshold. So we're not quite there, but hey, Fayette's not too far away. And with the way that jumped up from 4.1 to 5.6 in 1 year, over the next couple of months, if this keeps trending that way, it'll be there. But in a balanced market, it feels like a buyer's market for a seller, especially because we all got spoiled over the last 5 years with homes that sold in a couple seconds, with 1,000 people out the door willing to give you their firstborn child and whatever else you wanted, right? It was absurd. And now a balanced market feels like a buyer's market. There's no question. So Fayette 5.6, Rockdale's there. Year over year increases across the board, right? So most of these are still technically as sellers, but when you start to get, I know 5 is the threshold for balance, but really when you start getting into the 4s, 4.5s, it's already feeling like balance because buyers are going to get more of what they're looking for. You're going to have sellers paying concessions. You're going to fix stuff during the inspection report. You're going to get something off the sales price of the house, Again, there's exceptions everywhere, but that's generally what you're starting to feel at 4+ months of supply, which is where we've been and where we're trending and where some places have already moved beyond. Now, pending ratio is next for single family. And you can see this time last year, there's quite a few counties where we were still technically, from this perspective, in a seller's market. Now, we are trending in many places into a buyer's market, which is under the 18% threshold that you have here. So really all but Cobb is now in a buyer's market from this perspective, and Cobb's going to be there as well. It's just holding the line a little bit at 21%, but it's right around the corner. Now take a look at Fayette, for instance, right? 9.9. So it's 1 out of 10. In a given month, if you've got 10 houses in the market, only one of those houses will go under contract. So there's some interesting opportunities if you do want to live in Fayette on the buy side. Now, technically, there are more showings this year happening for single family, but when you take a look and you break it down by county, a lot of these counties have had pullbacks. So it's the difference between looking at the market as a whole versus looking at these specific counties. So some of the bigger drops, if there are less closings and pendings, it's not the biggest surprise that Fulton, Gwinnett, Cobb, and DeKalb, the big four, have had some of the biggest pullbacks. Marginal pullbacks here in Forsyth, Paulding, Rockdale, Fayette, and Douglas. These are marginal, and say Cherokee as well. But the big four have had pretty big pullbacks in terms of showings. So what does that mean for showings per listing? Because this will put the listings on a more even playing field, the counties on a more even playing field. So where's the attention? So the attention right now is in DeKalb, 6.3. It's in Douglas. It's over here in Paulding. And really Cherokee to an extent. The average is 5.1 for the greater Atlanta area. And this is the number of showings per listing. So you look at the overall showings, you look at the overall number of actives, and that's the simple math, basically. So this is where attention is right now in the market. So if you are in the market in these 4 counties, then you should be getting quite a few showings. Now, how can you use this information to your advantage? Well, let me show you. So take DeKalb, for instance, right? 6.3 is the average number of showings per listing. So if you're on the market, let's say in Decatur, and in a 30-day period, you've gotten less than the 6.3 number, it's because you're overpriced. If you have more than the 6.3 and you're not getting offers, let's say you get to 10 showings and you don't have an offer, you're overpriced. It's that simple. Every 10 showings, you should have at least an offer come in. And if you're not attracting that offer, it's because you're overpriced. And if you're not getting the showings, it's because you're overpriced, right? You could literally sell a house that is half burned down. If it's priced properly, you'll get a bunch of showings and offers, right? You can sell anything at the right price. My mentor, when I first got into the business, said, I'm not going to use the exact word, but you can guess there's a but for every seat. And it means that at the right price, every single house will sell. So keep that in mind. These numbers kind of give you an idea of what's happening for showing activity. And if you're on the market, you can kind of measure what your current track record is relative to what the average of the market is and kind of figure out what's the problem. But I'll tell you, in each case, it's because you're overpriced. So let's move on. And we're going to take a look here at where the price cuts are. So, okay, these are active price cuts. I like to show the difference between active and pending. So active is what the properties that are on the market have currently sustained, and this could be one or more price cuts. And here you can see that, for example, we were talking about Decatur. Well, 4 out of 10 houses, 41% of all active listings currently on the market have had one or more price cuts. And of those that have cut their prices, they've cut them by an average of 6.6%. So you've got to go to Fulton to get a higher reduction there, right? 6.7% is the average cut in Fulton, and roughly just over a third of all of the active listings have had price cuts. So that means that there's still 58.7% of the listings in DeKalb that haven't had a price reduction, or roughly 66.7 here in Fulton, or these other counties if you do the inverse of what those numbers are. Now let's take a look at where the pending properties are, because these are properties that successfully attracted a buyer, got a contract, and are now going through a transaction, right? They're going through an escrow period. So let's focus on Decatur because that's what we were talking about. So 41.3, yet the properties that went under contract, 35.4 of them needed price reductions, and at the time they had reductions of 8.5%. So 6.6 is the average for actives, 8.5 for pendings. The average active properties still need to move a little bit more to attract that buyer. So maybe you haven't cut it enough. That's what the data is showing when you look at this. Now, Fayette, over half of the properties have had price reductions that went under contract. And they've reduced by 8.2%. So those are where the two biggest reductions are, right? 8.5 and 8.2. Now, there's another number that I like to look at, and it's comparing the dollar value between these active versus pending for these different counties, and that's what this is. So how much does it actually equate for a two? And that depends on the median price of that county. So in Cherokee, the active properties that have had price reductions have reduced by an average of 37, but it's taken 48 to go under contract. In Fayette, it was 36, but it took 48 to go under contract. Very similar, right? 35 in Forsyth, but it took 52 to go under contract. Other properties like 29, 31. So really you've got one instance on here where active properties, the cuts outweigh those that were pending. And what that just says is that the properties that were pending were priced more appropriately, didn't need as big of a cut in order to attract that buyer in Douglas County. But everywhere else, the pending number is higher than what the active number is. So take it for what you will, but sometimes you think you may have cut and you didn't cut enough. And I mean, there's Douglas that's like that, and Fulton too, 47 to 43. So this next chart compares active versus pending, but shows us actual dollar numbers based on the median price with those percentages. So take a look. I mean, you've got some pretty big differences. So in Cherokee, for example, the active properties that have had cuts have had an average cut of 37,000, but it's taken 48 in order to attract a buyer and go under contract. Same thing in Fayette, that's practically identical. 35 to 52 in Forsyth. You got a couple places where they were more attractively priced and the cuts that were needed weren't as big. Those places are Douglas, 25 active, but 23 for the ones that went under contract, and Fulton, 47, but 43 is all that was needed for the ones that went under contract. So if you're a home seller and you're trying to figure stuff out, maybe you haven't cut, maybe you have cut, but not enough. That's where you really have to drill down in the specific numbers for your specific situation, right? So now we're going to move to townhome. So median price for townhome right now is $385. And then you've got places like Fulton and Forsyth where those numbers are quite a bit above. And Cherokee, Cobb, they're right at that average, that median price. And of course, if you have more economical options out in Clayton, Douglas, and Rockdale. There's only one spot on this entire list year over year where the price of a townhome went up, and that's in Clayton County, 228 up to 250. So I know they're building a lot of new townhomes out in Clayton, and they're slowly coming up in price. Everywhere else, there's been a pullback. You're going to see that trend for townhomes throughout this. So that's median. Let's look at dollar per square foot, median dollar per square foot. It's up in Clayton, and it's down with the exception of Douglas, which is practically even. It's down everywhere else. So that's because home values are coming down. And it could also mean that they're building slightly bigger townhomes, but it's more so the home values that are coming down. Now, taking a look at median dollar per square foot, it's no surprise then that Clayton is up. Everything else, with the exception of Douglas, is down, right? So it's not because they're building bigger townhomes everywhere. It's because home prices of townhomes coming down. So over here, we'll take a look at new listings. So there's a bunch of new townhomes for sale in Forsyth and Gwinnett. And you've got some pullbacks in Cobb and DeKalb. And I mean, this is interesting here. Like Clayton has been emerging for townhomes, so is Rockdale. But they're kind of going in different directions, at least for the month of February, with the number of listings that came to market. So what does that look like overall? So here are the number of active listings. So Clayton still is up by about 10 properties year over year. You've got 25 more properties that are on the market in Rockdale, and big jumps pretty much, in the big, well, kinda. Cobb has a little bit of a pullback. It's the only one that has a negative pullback here for the amount of inventory, but it's super small. It's marginal. Okay, so let's look at pendings. So where are properties going under contract less often? Well, the answer to that is, with the exception of Rockdale, everywhere. So big pullback in Cobb. Considering that the amount of active inventory there is still pretty high, it's a big pullback. Well, the same thing can be said about Fulton, right? These are big, big pullbacks. Now, taking a look at closings, there's a county that immediately springs to the forefront, and that's Cobb. So 207 closings for townhomes last year, down to 66. Like that's a 3x drop, 300% drop in the number of closings. That's huge, right? So, but you have drops pretty much across the board, with the exception of Rockdale and Clayton. I guess this time last year in Clayton, they didn't have a closing. Again, these smaller counties that have less townhomes as a whole, if nothing closes, nothing closes. But still, year over year improvements in Clayton and Rockdale. Okay, moving on, let's take a look at failures. Failures, they're down in some places, up in the other. That's the most generic thing that I can say about any stat, right? Numbers are up, numbers are down, but they're down. This is a pretty decent drop here in Cobb. They're increasing here in Fulton. So Fulton is one of those places I feel where there are more and more opportunities every day that you look when it comes to townhomes, condos as well, right? If you want to buy. Next, let's take a look at how long it's taking to attract a buyer on these townhomes at the middle of the market. And it's taking longer, with the exception of Rockdale. Rockdale has a really strong townhome market because they're cheap and people are searching for affordable options. And they're obviously looking at Rockdale quite closely right now. And Clayton's not too far behind. Everywhere else, look at how they're just kind of sitting there now, right? Like the average is right at like 44 days. And you've got many counties where the average is above that. So Cherokee, Cobb, DeKalb's almost there, Fulton's almost there, Gwinnett's there. And even though like things are moving in Rockdale, that's still a lot of time to attract the buyer to go under contract. But look at some of these jumps up, right? 25 to 46 is huge. And look at Forsyth, 16 to 37. That's a big jump up. All right, so let's take a look at months of supply and see what kind of a market we're in. So this is no surprise, right? We're in a balanced market in many counties, and the ones that aren't there now, this time next year will get there, which means that as Cobb moves into balance, Forsyth, Fulton, and Gwinnett, some of the biggest counties for townhomes, not in Forsyth, but certainly Cobb, Fulton, Gwinnett, while these others are going to move into buyer's market territory this time next year. So everything's just shifting up. I don't see that changing, not over the course of this next year. Okay, pending ratio, different way of looking at whether it's a buyer or seller's market. So again, everything under this line here is a buyer's market. So right now, if you take a look at DeKalb, that's roughly 1 out of 10 townhomes is going under contract in a 30-day period, which means that 9 others are just sitting there. So anything that's under this 18% threshold, the market favors the buyer in negotiations. And you can see that this time last year, Douglas and Forsyth were in a seller's market. Now, there's not a ton of townhomes in Douglas. There are more in Forsyth. But those markets clearly have dropped from 26 down to 10. That's the biggest drop on here. And Forsyth County has dropped significantly as well. So I mentioned Rockdale is holding well for townhomes. Well, you can see here at the pending ratio, it's still in balance. So whether it's the days on market, I feel is a little bit high at the 58, 57, 56 day mark, but months of supply and pending ratio seem to confirm that the market is still moving pretty well for townhomes out in Rockdale County. Okay, looking at list to sales ratio, you get some really nice discounts right now. So almost 5% in DeKalb, 4.4 in Forsyth, but it's all down year over year. You get bigger discounts everywhere. Total showings, there are more people looking this year than there were last year. If we break this down by county, look at this jump up in Fulton. So this had one of the biggest drops in volume for townhomes, also for condos that we'll see, but there's more people looking. They're just not buying. Same thing, a little bit of a bump up here in Cobb and DeKalb, for instance, and Gwinnett. It's up across the board. There's not a single county where showings went down. It's just people are being wiser and choosier with their money, right? They're not just throwing it at the first thing that pops on the market anymore. So that's showings per county. And if you look at where the attention is per listing, it was quite a bit higher for single family, right? There's less people looking at townhomes, but there's still a good number of people looking at townhomes. So Same thing, right? In Cobb, 3.5. If you're averaging less than 3.5 in a month, it's because you're overpriced. If you're getting to 10 offers and you don't have a contract, or if you're getting to 10 showing, if you're getting to 10 showings and you don't have an offer in hand, it's because you're overpriced. That's basically what it is. Not a bunch of showing activity happening in Rockdale. All right, let's look at where the active price cuts are. So the biggest price cut here, the award for the highest discounts on average go to Douglas. And for pendings, it's the same thing. So Douglas is at least being consistent. Both its active and pending properties have seen the highest price cuts of any county for townhomes. So the actual numbers, when you take a look, Douglas, the active is 19, but they needed 18 in order to go under contract, basically. Forsyth, look at this big difference. 21 is what the average townhome is cut by that has had cuts, and 30 is what was needed. All right, let's look at condos. So condos prices are down across the board. I know that we look at 11 counties overall. A lot of those counties don't have condos, or they're such a small sample size that it's completely skews numbers. So I focus on 4 counties when it comes to condos, and this is where the majority of them are. And really, the lion's share is right here in Fulton County. So that's a big drop, 315 to 305 year over year. And we've had some other drops in these other counties as well. Now let's take a look at the number of new listings. So Fulton, less listings coming to market this month than there were this time last year. A little bit of an increase in DeKalb and Gwinnett, a little bit of a drop here in Cobb. Okay, active properties. Where is the inventory? Well, the inventory is up and it's all the way in Fulton. No surprise, right? Think of where all the high rises are, all the condos. They're downtown, midtown, Buckhead, right? That's where the majority of them are. Now, going under contract, of course, we saw a big drop in Fulton. Well, that's where we had the biggest drop also for condos. And they're up a little bit here in Gwinnett, but other than that, they're down in Cobb and DeKalb as well. Now, closings are going to be down as well. So 143 down to 106. And then let's take a look at some failures. Failed listings are up. So in a market generally where failed listings have been down, they're not down when it comes to condos, they're up. So I think back to that 14.5 to 1 ratio, 14.3, whatever that was. There are a lot of active listings for the closings. So a lot of those are starting to fail, right? Now, moving on to median days on market, look at this big jump up. It's up significantly across the board. It's taking almost 2 months at the middle of the market to find a buyer for a condo in Fulton County. That's a big, big jump. Everywhere else, it's right at 48 days, which is interesting. That they're all at the exact same day, but that's what that is. But still, 2 months to attract a buyer in a condo. If you're starting to panic after a week or two, it's going to take a little bit longer. Doesn't mean you can't sell quicker. You can always sell quicker, but you have to kind of be at the right place at the right time, right price, right condition, right buyer. Okay, what kind of a market? Is it any surprise that it is a buyer's market in DeKalb and over here in Fulton? We're in balance in Cobb and Gwinnett, right? This time last year, you kind of see where the markets move just in 1 year. It's crazy. Okay, pending ratio. These are big, big drops in the other way. So we were talking about overall numbers earlier, but that is practically, what would you say, like 1 out of 14? So, which is funny. Doesn't this kind of look at the active to closing ratio that we had, the 14.45 to 1? Well, this is telling the story, right? 1 out of 14 condos will go under contract in a 30-day period in Fulton. The rest are just sitting. That number is equally the same in Gwinnett County. But look at this drop year over year. This was in balance this time last year, and it's a 3x drop now. It's taking, there are 3 times less properties closing in a given month. That's what that is. That's remarkable. Okay, let's look at cuts. So before we get there, we're going to look at final sales price, which is what sellers actually got, right? List to sales ratio. So 5% discount in Gwinnett, almost a 6% discount in Fulton, 6.5% discount in DeKalb, and Cobb is a 5 or 4.5% discount. So showings are up though. It's almost 300 more showings for condos this year. Showings by county, well, it's no surprise that Fulton will have the lion's share, but that is up. They're up across the board. And showings per listing will put the counties in a level playing field. And we saw with single family, right? It was like 4.5, and then townhomes were 3.3, and here we're at 2.7. So if you're getting less than 2.7 showings, between 2 and 3 showings in a month, you are doing worse than what the average is. But at 2 or 3 showings per month, that's not enough to get an offer, right? It's just not. You need to be getting closer to 10. And if at 10 showings you're not getting an offer, it's because you're overpriced. And if you're not getting more than 2.7, it's because you're overpriced. Most condos, honestly, are priced higher than what people are willing to spend for them right now, which is why they're sitting, and days on market, months of inventory, and pending ratios are what they are. Let's look at cuts. So right now, the highest cuts are in DeKalb at 7.8. It's a third of the properties have had them. And if we look at pendings, well, DeKalb's at 8.7, but look at Gwinnett over here. So 9.2% is what the pending properties needed in order to go under contract. That's 9.2% is the last price cut that they had, right? We'll know what they closed for. That's going to determine their list to sales ratio. But it's almost half of the properties have had cuts of 9.2% or more and then attracted a buyer. So see what I mean for the condos? Like you have to stretch a little bit more with these price cuts to finally attract that buyer and go under contract. So here's another way of looking at it, active versus pendings, and we'll focus on Gwinnett, but the active listings for condos have had a reduction reduced by an average of 18,000, but they really needed 32,000 in order to go under contract. So if you're looking at all these numbers and you're wondering, wow, with where the market is, should I consider buying a home this year? Know that you're not alone. I have this video you should watch that'll help you walk through a framework to help you decide whether or not it's the right fit for your situation. Watch this video next.